Mark here, and welcome to another Greenbridge Investing market analysis. Today is Monday, and we're going to be going over Bitcoin, the major markets, and select stocks. Hopefully you have some. And the idea is to get a perspective for the coming week because, we're still in that holiday mode, and it's important to develop the right expectations right from the start. So as you know, I'm streaming this live. If you have questions about particular markets, now would be a good time to start putting them into the channel. So when I get to them, it'll be in the middle of the thing here. And all right, so that's it. So let's get started. So as you know, this is for educational purposes only. For investment advice, please consult the licensed investment advisor. Now, if you're new to Greenbridge Investing, please make sure to subscribe to this channel so that you get an email notification every time I do one of these. And also make sure you like the video so that I know that you like it and I keep making them, okay? By the way, Greenbridge Investing, we provide trade signals, swing trade signals, portfolio ideas and analysis, and we also have a chat room. So please check out the website and give us a try. All right, so today's Monday. And as you know, on Monday, we have to go over this. Okay, I know it's not always fun to go over, but it's important. All right, so we don't have a whole lot going on the economic front this week. Hey, Nicholas, thanks for joining. We don't have a lot going on here, okay, which is good. We don't want a lot going on because that means we can take trades with not, and we don't have to expect too much range expansion or randomness. Now, so what do we have? Today was ISM non-manufacturing. Again, that's not a big deal. None of these reports are even a big deal. Now, we have the Australian interest rate decision, which is tomorrow, or maybe this is on US time. This might be actually tonight, 12:30 a.m. So, we're not in any Aussie pairs. We don't have the Aussie against the dollar. We're not in anything that could really affect this thing. Hey, Joe. So I wouldn't worry too much about this. If you're in an Aussie pair, then, you might want to at least be aware of it, but I wouldn't worry too much about it. Otherwise, China Consumer Price Index, again, I wouldn't worry too much about it. The Canadian unemployment rate, again, we don't have any Canadian pairs. This is most important for Forex, by the way. The key reports that we want to see, of course, are the FOMC meetings, any Chairman Powell testimonies or NFP reports. I mean, that's really all we're interested in knowing about when they're coming out so that we can be prepared. Otherwise, there's nothing going on. So that's good. Now, let's get into the charts, beginning with Bitcoin. So I wrote my trading view analysis yesterday, and my point of that analysis was this quiet price action is just basically a sign of strength. Now, I didn't even talk about this pin bar that closed yesterday. I didn't even talk about that because by the time I published the analysis, that bar was still actually open. Now, so it closed as a pin bar and it generated a new buy signal. All right, and that new buy signal was basically at 91.50. So we're in this thing from 92.25 anyway, right? That trade has been in play since we called it back here from this inside bar. And again, people confuse, and this is what I want people to learn from. The idea of trend. People say to me, well, you get these lower highs. These are not lower highs. On a small time frame, they are. If I'm watching a 30-minute chart or a 1-hour chart, but here's even the problem even with that, and that is this market's not making lower lows. These are not lower lows. Some people argue, oh, but this is a lower low. Look, the low here is 88.30, and the low here is what's the low there? 8,900. That doesn't even count, okay? Relative to the time frame we're looking at, it doesn't even count. So you have to be able to put this into perspective. Do not be confused by people that are showing 30-minute charts or 1-hour charts and making ridiculous predictions. It's not going to help you. So our swing trade strategy is based on the daily time frame. There's no need for us to look at a smaller time frame because it's just random noise. We're interested in the location. And this location, this 9,000 area, or high 8,000s, is way above the 8,500 inflection point, which is the bottom of the range. So we were near the bottom of the range. Probability favors buying activity, and we had some clues from these little tails. I mean, these aren't all pin bars here, okay, but we had tails the whole time. So obviously, any type of selling activity that would test into that low, that would probe into that low, was being absorbed. So this candle should not be all that surprising to us, this large green candle that we're seeing today, because the shorts are going to get squeezed. This is the process that repeats itself over and over again. So now that we have this candle in play, if we get a strong close today, then that's a great sign. I would anticipate that this thing is going to at least test the middle to the high of the range. And that's within reason. Can this be the beginning of the breakout leg? It might be, but a chart can't help us predict if this is going to be the beginning of the breakout leg. All we know is we know our proportional resistances, and we have to see if price can get there and how it behaves when it gets there. If we do clear 10,400 and we do have a breakout leg that follows through, then look out, because this thing can go to 12,000 pretty quickly if an event like that occurs. You would probably need some sort of catalyst behind that, you know, some sort of piece of news that catches everyone by surprise, causes more shorts to get squeezed and new buyers to jump in, okay? But we don't bet on those type of low frequency events. We're just looking for a retest of resistance, and obviously we have some targets there, and of course we have some targets outside the range in case we do get that breakout. So the point is nothing to do with Bitcoin, but sit back and let it do its job. Okay, people want to argue about trend, but this trend is bullish. Okay, on this time frame, it's bullish. There's nothing bearish about it, and there has been nothing bearish about this. Even in all these bearish candles, has nothing to do with the trend on the time frame that we're evaluating. So I just wanted to emphasize those points. Okay, so Nicholas, could you take a look at ONT USD? Sure, we'll take a look at it. So let's take a look at the next market here, though. And once I finish with my markets and my stocks, we'll take a look. So let's take a look at the NASDAQ, all right? The NASDAQ 100 CFD. So this is the NASDAQ 100, and it's been nothing but strong. Today is an unbelievable day. We don't see, this is tough price action. Why is it tough? Well, we had this Sunday price action here, that little inside bar, which was really nothing, okay? And I said before the holiday began, I said on Friday, Friday, I said volume in these situations is very low. So you can't really make any judgments on these things. Anything can happen, right? So there's no way you can predict that something like this is going to happen. So whatever news drove this thing, whatever, it doesn't matter what it is. All I know is we pushed a dramatic new high. Now, that's great when you're long stocks, okay? Buying new stocks into such a move for anything longer than a day trade becomes risky, because if this thing fakes out, you're going to get caught. Now, here's why would I even say that when it looks so optimistic? It looks so good here. Well, I'm going to show you really quick why I say that. Okay, if you take a look at the S&P, and this, I mean, I've been watching this, but it's really getting apparent now. If we take a look at the S&P, let's take a look at the ES. Okay, this chart is not in real time, but it doesn't matter because I don't need it minute to minute for this comparison. The ES is not pushing dramatic highs. Okay, so the NASDAQ, relatively speaking, the NASDAQ is way up here. Okay, because the NASDAQ took out that March high and it's way up here. The S&P, although it's taking out this lower high, okay, cool, that's good, but we haven't taken this number out yet. Okay, what is this, 3230 area? What is this high here? 3231. So for one, we're not making new highs. That is a red flag that we need to be cognizant of, because if the NASDAQ has a broad retrace, this thing is probably going to get hammered faster, which means, this is a broader gauge of the market, and that means a lot of stocks are going to feel the pain. So just something to keep in mind. This is not a place to feel complacent. This is not a place to be figuring, oh, it's safe to invest now. The market's strong, right? That's complacency. You don't want to be that way in an area where this thing can produce a failed high. So The place to put on longer term positions or larger positions would be near lows, not highs. So that's the comparison I want to make. So what do you do? Well, there may be some stocks that are giving us breakout patterns and this and that. Okay, you want to get involved in them, that's fine. But you have to be cognizant of your size. Take smaller risk by managing your size carefully. Okay, because if there is a pullback, you won't feel it as much as people that are just piling in because they think that it's safe. All right, I just want to point that out. Now, I only get that way. I get very cautious at highs. Okay, at lows, I just wait for stability. And of course, I want to look to buy into those lows in a bullish trend. Now, I'm not anticipating a bearish trend from here. All right, but a pullback is likely. So we have to see what kind of catalyst it will take to pull it back, and then we can make a decision from there. Otherwise, we just do what we're doing, find some stocks here and there, rotate in and out of them, and that's it. That's all we can do. The higher it goes, the more cautious we have to get, okay? Everything is in terms of risk, not reward. Okay, so that's the NASDAQ, excuse me, and S&P. Let's now take a look at the euro really quick, and then we'll take a look at gold. So where's my euro chart? So the euro was this nice trade that Andrew sent out the previous week. And it was called, well, back here somewhere, right? In those 12, what was it, 1250 area or 1275 area, I think it was. I forget the exact number. And it was fooling around at first, giving us a hard time. But like we always say, you have to be patient with these things, okay? And the patience pays off. Look at today's candle. This thing went as high as, what is this? What's the high here? 1345, okay? And I believe the first target was 1350. So it hasn't reached the first target yet based on this chart, but it's on its way there. I mean, it's likely to touch. So where are we now? 1312. So, okay, it came within 5 pips of that first target. Point is, this is a nice strong candle, and this is what we were waiting for. So we just let this thing ride. I'm pointing this out because we had to sit through some noise. We had to sit through some nonsense. And during that noise, there was some ugliness. I mean, look at this candle right here. Okay, look at this bearish pin bar. That can shake people out of trades if you don't understand the bigger picture. Okay, we didn't get out. We just said, hey, if we have a stop, if it goes to the stop, it goes to the stop. But you can't get faked out by things like this. You can't take each candle literally. You also have to look at the context. And this thing is in a broader consolidation, just like Bitcoin. And the broader structure is bullish, okay? Higher lows and higher highs. We have one big broad move there, that breakout. So we're just looking for a continuation. And that's it. We don't get wrapped up in fundamentals. We don't get all confused by any of that stuff. All we're looking for is price momentum and just a continuation of that momentum. That's it. The simpler you can keep it, the better. So that's the euro. Again, nothing to do there, but let it ride. All right, the pound, I missed the pound, and I'm not going to chase it. So, at least we got the euro. Now, let's get into the next thing here. Let's talk about gold, and then we'll jump into the stocks. So here is gold, right? Now, we had 2 trades on gold. There was one that I sent out, and there was one that Andrew sent out. And mine reached 2 of its, actually both of them reached 2 of their targets, okay? Andrew's second target was 1780, and this thing obviously made a high in the high 1780s. So again, this trade was along back here. Our next target on my particular trade is at 1815. Just like these other strong markets, this thing is producing higher highs and higher lows. Okay, this is a higher high, almost, just about, but it made a higher high previously, and it's got these higher lows in place. Okay, as long as those higher lows stay intact like that, there's really nothing to worry about here. Especially we got this nice breakout. Gold is on its way. Now, gold is a sensitive market. It can pull back at a moment's notice. So this is not a place to put on more gold. If you're not in from a great price, this trade we're in from 1703. So if you're not in from a great price, the risk now is very high. That's the difference, okay? People that are jumping in now looking for this breakout, they have to hope that it keeps going. And it may keep going, and they may the market may reward their not so effective behavior. Okay, because you keep doing that over time, you're going to get caught in those fake outs. You're going to get caught in these kind of things, and then you're going to get caught banging it out at a bad price. Okay, so we're in from a good price. We're a strong hand. There's nothing to do but let this thing ride. Okay, just like Bitcoin, just like the euro, just let it ride. So that's gold. It's in a great location for a continuation. It's not in a great location for putting on more. So I want to make that clear. All right, so that's gold. Now, let me go through some questions here. I wanted to cover at least a couple of stocks. Now, we also have our podcast today, I believe. I'm not sure if we're going to be on YouTube just yet. I haven't gotten the confirmation. I'll know in a little bit. And if we are going to be on YouTube, I'll put the link in the chat room. Okay, but at this point, I don't know. So, Nicholas, could you take a look at it? So, ONT USD. Oh, so Ricky, the euro reached its first target because on that Owanda chart, it's not showing that. So that's why it depends on the broker, for the euro, right? Let me see. Let me check this broker here. This is, well, that's Owanda. What's the high on that? Oh, well, that's 1345 on Owanda. And then this broker here, who's this? FXCM. 13, what's that high there? 1345. Yeah. So I believe the first target was 1350. But anyway, I could be, I may be mistaken on that, but that's what I thought the first target was. Anyway, but this, it's in good shape. So, okay, so Nicholas, let's take a look at ONT USD. And let me just see what other questions I have here real quick. Joe, what sort of level would you go long on the S&P? Wait for 300 more pullback? Thanks. Okay, great, Joe. That's a good question. Hey, Michael. Good to see you. Okay, great. Oh, great, Ricky. So for those of you that got out, maybe you got out of the euro, maybe you put in the first target at a slightly different price, whatever it is, if you took your profit on that high, nothing wrong with that, okay? That's a great habit to get into. Taking something off at an initial high, you're reducing your risk. So great trade, great job, Ricky. All right, so let's take a look at this ONT USD. Now, is that ONT USD? I'm not familiar with that. Okay, is that that must be a coin? Not familiar with that at all. Okay, it's on Bittrex. This must be the ticker you're talking about? So, all right. So let's take a look at this thing. So you're saying that nice trend on the daily. All right, well, recent structure, if this is the right symbol that I have here, all right, this is one of those really inexpensive altcoins, it looks like. Since the bottom here in March, yeah, you have this series of higher lows and higher highs. Okay, it's been working its way up slowly, but there's a little bit of a problem here that I don't like. And what I don't like about this is this very steep bearish movement and the fact that this is basically a lower high relative to that movement. So this thing may continue higher, right? It is, recent price structure is bullish, but you're still competing with this structure back here. So, oh, really? Okay. I would imagine the charts should look similar. They should look similar no matter what exchange they're on. But the thing is, but you're right though, recent price structure is showing higher lows, okay? And in theory, this thing should go for this high right here. I don't know about this pin bar. These pin bars could be bad ticks. I don't know. When I see them really long like that, a lot of times they could be erroneous trades or whatever they are. I really don't give them much, I don't give them much weight, okay? So we'll look at this over here. What's this high here? 67.02. So, it's reasonable for this thing to at least test that high and perhaps try to make that higher high. That would make sense. So, but if I wouldn't get too optimistic, like I would say, oh, this thing's going up to $1, over the next week. Like I wouldn't get too optimistic. But in terms of strength or weakness, yes, it's showing strength on the short term. If it takes out one of these lows, all right, like 55.15 or this low over here, basically 50.20. If it takes out one of those lows instead, I would step away from it because relatively speaking, it's not doing as great as some of the other coins. Okay, especially the leader. I mean, I compare everything to the leader, which is Bitcoin. So great question, Nicholas, and thanks for bringing that up. So right, the broad. So you have to keep that. You have to keep that in mind when the bigger picture is kind of working against you there. All right. So it also depends on the time horizon of your trade. If you're looking for a swing trade, okay, cool. You want to try to work with this and look for that breakout, okay, cool. But like I said, if it takes out one of those lows instead, that's not what it should do. And that's a red flag to basically say, okay, you know what, step aside and then let it find some more stability and see what develops from there. Okay, if Bitcoin breaks out, then perhaps that'll give this thing some catalyst as well. But I don't know what this, I really don't know the relationship to Bitcoin. All I know is what Bitcoin's been in a range and this thing's slowly been working its way up. So each one of these things is going to have its own unique variables, and maybe there's some particular news driving it. But that's how I'd work with that one. Remember, all these altcoins, there's nothing safe about them, and they're highly speculative. Always keep that in mind. Okay, so thanks for bringing that up. Yeah, so let's take a look here. So Joe, let's go over Joe's question here. What sort of level would you go long on the S&P? All right, that's a great question because the S&P obviously has been, like I said, it's been acting relatively weak. Let's look at the ES. Let's use the ES as the example. The ES is the futures contract. You could use the SPY as well. That's the ETF. But here's the ES. So what levels would I look to go long? Well, based on this thing right here, certainly not where it is now. For a swing trade type of long on this market, the ideal situation would be to see a pullback to this support right here, okay, which is what, 29.83. So basically the 3,000 area, which would probably equate to what, 300 on the ETF, around there, maybe the high 280s, 290s, whatever. I know the ETF is slightly different. I mean, okay, let's take a look at the ETF. That would be the SPY right here. So, on something like this, same idea, okay? So what are these lows here? 299, right? So that coincides with that futures low that I just showed you. 296, those are your lows. So the ideal level would be around there. It's possible that you get a higher low somewhere between here and there. That's probably going to be a little trickier to take, but the ideal situation would be the test of low and a reversal, or basically like a failed breakout. That support breaks, but then it doesn't follow through, and you get people, the shorts jump in, they get caught, and that becomes a nice trade with a lot of potential. That would be the place to put on a trade on the S&P based on this context. Okay, it can go slightly lower. I mean, you have an old resistance back here at this high 294, 295 area. So it's possible that it can test there, but those would be the locations to even think about it for a swing trade, not the current locations. Okay, so I hope that helps. Great question. Okay, so AMD, let's take a look. Now, AMD, as we know, is a semiconductor, right? And it's one of the chip maker, they're one of the leaders, right, in the space, competitor with Intel and all that stuff. They're very big into, the whole Bitcoin thing. Now, so AMD, and I know I believe they had their earnings recently, I believe. I'm not sure though. I don't follow that too closely. Now, with the NASDAQ pushing highs the way it's pushing, the stock should be doing better than this, okay? The stock is struggling. Not only that, I mean, I say struggling because why aren't we at the high of the range? At least, why aren't we at the high of the range? Okay, we're sort of in the middle of the range, which, that's a red flag. And today, we have this doji situation. Why aren't people buying AMD? Right, the NASDAQ is going straight up. I mean, the NASDAQ is going to, it's going up forever there, and this thing is lagging like this. That's a sign of weakness. So, without the NASDAQ, just put the NASDAQ aside. I mean, this market's range bound, okay? It's range bound, and you're in the middle of the range. So, I mean, that reason there alone means just if you're not in it, there's nothing to do with it right now. the best places to buy something like this, just like the S&P, would be near the range low. If it gives you the opportunity, you know, that $50 area would be a range low to consider. If it closes below that range low and the NASDAQ starts pulling back, look out, because this thing is relatively weak, okay? It's not like some of these other super strong stocks that we've looked at. So that's something to keep in mind here. If you're in it, then, you know, maybe if it doesn't behave well over the next few days, perhaps you can reduce some risk, lighten up a little bit. If it pushes toward that range high, that would also give you an opportunity to reduce risk. I wouldn't be putting on more risk in something that's looking like this in the face of such a strong market, okay? Just something to keep an eye on, or just something to keep in mind there. So thanks for mentioning AMD. Now, obviously, look, I don't go over fundamentals, and I'm only interested in short term, meaning couple of days, couple of weeks. I'm not looking years out. Obviously, AMD is not a bad stock. I believe they pay a dividend as well. So really long term, I mean, you know, you could, if you wait some time, you could probably get a better price if you just wait. And that's really the time to pick these up. I mean, look, when everything was going nuts a few months ago, you could have picked up AMD at what, 36, whatever, right? That's really the time to pick some up for long term. You have to wait for a really broad inflection point, and sometimes it really requires a strong catalyst to get it there. Otherwise, if you're taking small bites here and there, I mean, you have to try to play it safe. If you're going to do that, at least try to do it nearer the support levels. Okay, so AMD. Okay, great, Nicholas. Okay. So let me see the next question. Michael, could you look at MDB again? Sure. So that's Mongo. Let's take a look at MDB. MDB. It's Mongo database. This is one of those cloud stocks that we has been on our radar for a while. Let's see. So reached T1. Okay. Okay. Reduce the risk by raising stop to my buy price. Okay, great, Michael. So reached your T1 and came $4 of T2. Where's your target to, if I may ask? I mean, this, look, this is a strong stock, okay? I mean, look, compare this chart to what we just saw in AMD, right? This is a strong stock, and this thing has been, you know, doing well. Now, it had this failed low situation back here. It made this next attempt at the high, which is that's what a strong stock should do, but it didn't take out the high, okay? So now it's starting to change a bit, and now Michael says that, you know, you get this bearish candle. It's sort of like an outside bar situation, and on Friday, you had that pin bar, or Thursday, whenever that close was, you have that pin bar. So it's acting a little, you know, it's not doing its job right now. So here's the thing. So Michael says that he reduced his risk by moving his stop to break even. Okay, great. So theoretically, it's a risk-free trade. If you're giving anything back, it's just profit. So now think about this. So you're out on T1, which means you reduced your risk, all right, by, I don't know how many targets you have, but let's just assume you have 3. You reduced your risk by 1/3. You moved your stop to break even. So you've reduced the trade from a trade that carried negative risk to a trade that you're only giving back profit. Okay, 236 was your second target. Wow. Okay, yeah, that was close. So now in a situation like this, you know, this is a tough call in a way, because the NASDAQ, with the NASDAQ doing what it's doing today, this thing should be performing better. I would expect this thing to at least trying to push higher. So in a situation like this, if it was my position, I'd probably take a little bit more off the table. You know, so again, if you had 3 targets, so that means you have 3 units on, right? And you're looking to reduce your risk by 1/3 each time. Maybe in this situation, instead of taking off a full unit, you take off a half a unit. You know, so let's just say, just for example, let's say you have 300 shares, okay, or 3 units. So you sold 100 shares at T1 and you missed T2 by $4. So you have 200 shares left, sell 50 shares. Okay, now you reduced your risk somewhat and you have 150 left. Okay, so at least you reduced something on this red flag, because it shouldn't be behaving like this. Now keep in mind, these stocks can be noisy at times, you know, like we saw with Roku. and it may pull back a little bit, and next thing you know, it's pushing 240. The stock market hasn't given us a reason to sell. There's no sell signal on the S&P or the NASDAQ, which means, this thing just may be taking a break for whatever reason, and then it may play catch up, right? So you can't, so that's why the best thing to do is just to reduce the risk. Now, if the thing pulls all the way back to where you got in, well, at least you locked something in. The trade is still green, and you gave back profit, right? And the trade, at least you locked something in at better prices. If it just acts noisy for a little while and then breaks out higher, you'll be happy you stayed in some of it, right? The mistake that people make all the time with these, Michael, is they want to get everything out at the top. They say, I got 300 shares and I want to sell all 300 shares at the peak, because isn't that what we're supposed to do? No. You're never going to sell at the top. You're never going to buy at the bottom. That's why it's smart to reduce risk along the way. And when this thing starts messing around, you become a stronger hand, not a weak hand. When you're full all in and you have all your shares, you're going to be much more sensitive to the price movements, because I don't want to get any money back. So that's when the emotions, the emotions get involved, and that's where a lot of mistakes come from. You get out of all of it thinking, oh, I got out at the top, all right, and the next day it's up 5 more points. Okay, oh, why didn't I hold it one more day? They faked me out. Those market makers, they faked me out again. So right, it could just be some profit taking. It could be anything. It's just noise. So it could be a fake out, or it may lead to more selling action if we get the pullback on the stock market, which we just haven't gotten. But what if tomorrow or the next day we get a broader pullback on the stock market? This thing will probably give back some more. So that's where, like you said, you're near a high. Sell some when you can, not when you have to, right? You're selling into some sort of strength, generally speaking. You're locking in some more profit, and you're becoming a stronger hand, right? It's all about reducing risk, not trying to squeeze out as much profit as you could possibly can, because that's, again, everyone wants to get like a home run, and with that kind of mentality, usually you don't win in the long run, okay? Always trying to go for that, oh, I'm going to make 100 points on this one. You're not going to make 100 points. Chances are you're not. Okay, you may get that lottery ticket here and there, but you can't look for a lottery ticket. All right, you're better off just reducing your risk when you can. And in the long run, that type of behavior will make you more consistent. Okay, so great question. Thanks for asking that. So I think I got everyone's questions here. Do I have any other questions? Any other questions? Remember, if you're new to Greenbridge, make sure you check out our website, greenbridgeinvesting.com. Like I said, we have we have swing trade signals across all the different markets. We have portfolio ideas, and we have a chat room, okay, with analysis that we share all the time. Also, make sure to like this channel and subscribe to it, so that when I do these analysis sessions, you get the email notification from YouTube. I am planning to evolve these further at some point. So, right now we're just doing analysis, but I would like to make these more educational. So I'm working on some ideas. Okay, so, okay, great. So Michael, on something like that, T3, 258, okay, look, no problem. That's why I say don't unload a full third, unload half of a third. Meaning, so if you had 300 shares, right, a third would be 100 shares. But if you reduce that by half, so instead of getting out of 100, you get out of 50 shares, right? So that's not a full third. That's half of a third, right? So at least you're reducing some risk, and you're still in a decent size, you're still in a good portion of your position. In case this is noise, you're still in a position to benefit, okay? Okay, great. So can you take another look at work? Which work? There's a few different works. You talking about work horse? Or WO, are you talking about work day? What is it, work? Is that the full ticker? Yeah, Slack is work. Right. Everyone uses that word work, because Workhorse went nuts too. Is this the one you want? Okay. So, okay, Nicholas, as of right now, I'm not sure if we're going to be on the YouTube channel just yet, because I haven't gotten the message. But to listen to the podcast, I'll put the link in our chat room so you can check it out there. I'll put the link in here as well. Hold on. I'll put it here while we're here. I'll just type in that link, the podcast link. Hold on, just give me a second here. This is where you can listen to it. Oh, that's wrong. Hold on. I can't see. I can't type today. It should be Tampa. Okay, that right there is the link to the podcast to listen to it. All right. If we do YouTube, obviously we'll be on this channel. Okay, so good question. All right, so Slack. Let's take a look at Slack. So this thing here. Now this is an interesting situation, and here's why. So it's not acting as strong as I'd like to see it, based on the NASDAQ, but you do have a good location. Look at this. So you have this old resistance here at basically 29.5 or $30, basically. That's the whole number. And you're fooling around there. You have it's acting as a new support. And today you're getting an attempt at some buying. So this one would make sense, at least for a swing trade. I like the setup. In fact, we may even talk about this on the show. You have this outside bar situation. Your risk can be very well defined by that $30 low, or basically $29 around there could be the where you're measuring your risk from. And there's a lot of potential in this thing, right? You have, what are these highs here? 34.20, and then you have this gap, which is still not closed. So what's the low of that gap? 37.5 basically. So you're risking $2 to at least make $4, at least. That's good reward risk, okay? So I definitely like this. Thanks for bringing this one up. Now, is this one that you just happen to have on your radar, or did you hear about this somewhere? Because this is a great location, and it's got a nice structure, right? Because you got the double bottom situation going on here. And it's got nice potential. It's got good reward risk. So that's a very good candidate for a swing trade long. Thank you for bringing that one up. Okay, so anything else here before I wrap this up? I mean, that was a pretty good session. We covered a lot of different things here today. I want to thank you all. If I don't have any more questions, I want to thank you all for spending some time here with me and giving me some good symbols to go over. Oh, from 3104. Okay, that's a good price, Ricky. That's a good price to be in from, because basically $29 is where you're measuring your risk from, around there. So it's only a couple of dollars. And I see it's been fooling around. So sometimes it's tough to sit in it when it gets noisy like that. The thing you have to keep an eye on is if the NASDAQ pulls back, because then it'll probably break that support. So that's what you got to keep an eye on. Okay, right, because these things can be noisy, okay? And obviously, why the other question that we have to ask is, why isn't this thing at least pushing a resistance while the NASDAQ's pushing highs? You do have to keep that in mind. All right. Okay. Hey, Hamid. Let me see. All right. So sure, we have time for another one here. KLR. Okay. Not familiar with it. Let's see. KLR. Let's see. What is that? Okay. This must be it here. Is this the stock? I see we're fooling around here at what are we at today? Closing at $4.10. Now, if this is the stock, what right from the start, what I don't like about it is this type of price action right here. Don't like this. This is a sign of no volume speculative type of stock, right? I can tell just from the lack of candlestick structure if this is the right stock. Now, with that being said, if I just look at the general trend of this, it's bearish. There's no question it's bearish. Okay, lower highs, lower lows. Now, when you look at a stock like this, when you compare this to something like AMD, or you compare this to something like Workday, you can see the difference, right? This is bearish. Those stocks are a lot more bullish, right? So you can see the difference structure-wise. So in a situation like this, I mean, it's trying, I could see it's trying to turn here a bit, but I mean, look at this gap recently. I don't know what this is about, but this is a nasty gap for such an inexpensive stock. Obviously, day traders are going to be all over this too. This is the kind of stock that'll pop up on a day trader radar because it's inexpensive, especially when it gaps like this. So based on this structure, I would anticipate it's going to go for a lower low. That's what I see here. So if you're interested in longs, it's not in a good, there's no structure here for a long. It may be in an attractive location because it's so inexpensive, but the structure is not supportive at all. If anything, before this thing becomes a long, it either needs to pop up a bit and give you a clear and distinct higher low, or it needs to take out this high, which is basically $7. It needs to do that to start proving itself that this bearish trend is no longer in play. Okay, so I would hold off on this one until at least it shows some sort of stability if you're interested on the long side. Okay, again, I'm not familiar with what they do. So AXP, okay, that's American Express. I know we took a look at this one recently too. Yeah, let's take a look at AXP real quick, and then we can wrap this up because I have to see what's going on with that podcast. I got to set up for it if we are going to be on YouTube. So thanks for that symbol, Hamid. So AXP. Now, so here's the situation. Now, and Hamid, also look at this. I mean, compare the structure, right? Just compare it to AXP. AXP is more of a market stock, obviously. It's going to follow more of the S&P than anything else. But, I mean, look what's going on here. So it found some support eventually, right? It broke that bearish trend by basically taking out this resistance right here, which was this $92 area. And now it's pulled back. So it's not only has it pulled back, but it's pulled back into that old resistance, which is now a new support. See, look, I could draw a line on that, right? And it's not exact. These are never going to be exact, but it's in the general area, right? And that's good enough. You can't expect precision with these type of things. So here's the thing. You have the pullback. It's in a good location. I like the old resistance area acting as a support for a possible long. But at the moment, though, you have this tiny little bearish pin bar, which I'm not too crazy about that. What I would like to see in this situation is another test of the low and a failed low. So 92.45, is that the low there? 92.45? Yeah, so basically that 92.50 area, you get this little mini double bottom situation over the next week. This could be a good candidate for a swing trade long. Just like that stock we just looked at, Work, right? Was it Workday? I'm sorry, Slack. You know, just similar to that type of situation where you're getting a double bottom. Now, this one is obviously going to be more dependent on the S&P. If the stock market breaks and it breaks lower, then it will probably clear the support. That's why you can't step in front of it and just be like, oh yeah, it's at the support, I'm just going to buy it. You can't do that. You also have to make sure that the market is somewhat supportive, okay? So like if the market pulls back a little bit and then this thing kind of fools around a bit around that area and then the market turns and the market starts going higher, then this would probably be a good candidate. But if the market has that broad pullback, which again can come out of nowhere, then you know this will probably break as well. So just be aware of that. But in general, you know, I'm not saying that this is a bad choice. I'm just saying in general, you could probably wait for a slightly better price. And it's also sort of lagging, right? Based on where the market is, this thing should be performing a little bit better, but the location is good. And sometimes sectors lag. I mean, that occurs sometimes where the market's pushing way ahead and then the stock is just kind of behind a bit. And then at least, you know, maybe you get a test of the mid part of the range here over the next couple of weeks. We're at that 104 area. That's not that unreasonable. Okay, so just something to keep in mind. There's just no setup. You got the location, there's no setup, and the stock market is in a position where it is more likely to pull back. And if it pulls back, what is this thing going to do? So that's what you have to watch for. Okay, otherwise, this is a good candidate. I like it in general. I like it for, you know, something as a swing trade long, similar to Work. I really like Work, you know, so we're probably going to talk more about that, like I said, on the podcast. Okay, so great questions, everyone. All right, so now this time I'm going to have to wrap it up. I've been talking for like 45 minutes, and I appreciate all of your questions. Great questions. You know, I really like when everyone joins in and has different stocks to look at because, you know, it helps everyone. All right, so if you're new to Greenbridge, check out our website at greenbridgeinvesting.com. Check out our podcast. We should be on at 4:05 p.m. EDT. which is in about an hour and 20 minutes or something like that. Okay, and if we're not on YouTube, just go to that bit.ly link that I sent there, and that goes to the radio station feed. Okay. All right, everyone, no problem. And if you have any other questions that maybe come to you after this session, just share them in the chat room. I know Andrew's he's just been a little occupied, but he'll be back. He should be back in full swing, by this evening. So no problem there. And if you have any questions, like I said, just please feel free to ask, and we can follow up in there as well. All right, so thank you very much, everyone, again, for participating, and I'll talk to you next time. All right, enjoy. Bye. See you in the podcast.